Welcome to your daily digital download for Friday, May 22nd. How the heck are we doing out there, folks? What a week it's been. I think we've had some quietly steady, positive crypto news. Huh? That's what I think. I don't know. Maybe I'm wrong. I'd like to think I'm right, but, you can never tell with these things. Let's see if we can... Let's just do this. There we go. Posting to the old TL. Thank you, everyone in the future who's watching this. Well, what a time to be alive, huh? I just did a Twitter space today on Hyperliquid. It's been a while. It's been long overdue, I should say. I've been wanting to dig further into Hyperliquid. Why is hype pumping right now? Why is everyone talking about the platform? And it was a nice space. I might even write an article about it and share it on the Smart Economist newsletter. If you haven't yet, please subscribe. Look, I think this news is just exemplary of what we've been seeing this whole week. Largely adoption where adoption's due and shutting down of networks that didn't get adoption. So let's just jump right into things. The House Oversight Committee has launched a probe into insider trading on prediction markets, Kalshi and Polymarket. House Oversight and Government Reform Committee Chairman James Comer sent letters today on Friday to the CEOs of Kalshi and Polymarket as part of a congressional inquiry into insider trading. The letters are requesting documents on how each platform verifies user identities, enforces geographic restrictions, and detects anomalous trading activity. Why, might you ask? Well, Comer wants to determine how widespread insider trading has been and build a case for legislation that would ban members of Congress, administration officials, and government employees from trading on prediction markets altogether. Yeah. No shit. These guys should not be trading on prediction markets. They clearly have insider information, as we can see in the second half of the story. The probe lands against a backdrop of well-documented cases where, for instance, in April, a U.S. soldier was arrested for using information ahead of the ousting of former Venezuelan president Nicolas Maduro, where this guy invested around $30 million or bet around $30,000 and netted roughly $40,000 on Polymarket. And then separately, a New York Times investigation found that more than 80 Polymarket users placed suspicious trades, including wagers made hours before U.S. and Israeli strikes on Iran. Look, man, elected officials should not be making money off of us on stock markets, and yet they do. I'm looking at you, Nancy Pelosi. And they should not be making money off of insider information on prediction markets. So let's see what Comer's probe turns out. On to some other slightly salacious, spicy news. Dankrad Feist, a former EF developer, has suggested that they raise $1 billion to create a new non-EF Ethereum advocacy group. People are pissed at the EF this week, the Ethereum Foundation. Dankrad famously left earlier this year to go build Tempo, an L1 that is catering towards institutional users. It's an institution chain. And a lot of people, denigrated him for leaving EF to go build a corpo chain. But, it's the free market. People can build wherever they want. Dankrad is saying that Ethereum and ETH needs to be saved. Well, if you really believe that, maybe you wouldn't have left to go work on a corpo chain. But he said the way to save Ethereum, the community needs to create an organization that's economically aligned with Ethereum and accountable to it. Ergo, he's proposing a new ETH-focused organization with a minimum of $1 billion in funding and what he describes as something that needs competent leadership. Over the past few years, frustrations with the EF has been growing. It kind of subdued last year when Tomasz and Xiaowei took co-leadership role over the Ethereum Foundation, and it was good for about a year. We started to see more investments into builders building on Ethereum, into apps and dApps building on Ethereum, and then Tomasz left earlier this year. In addition to Tomasz leaving, several other high-ranking EF contributors have left as well. I believe 8 so far this year. Dankrad left at the end of last year to go join Tempo. And additionally, Danny Ryan left to go co-found Etherealize, but Danny left like a year and a half ago. So this isn't part of the story. Let's not get it conflated. But that being said, Carl Beek and Julian Ma tendered their resignations this week from the Ethereum Foundation. And long story short, after Tomasz left, there was this whole manifesto around crops, censorship resistance, and privacy, and so forth. And apparently, folks at the EF were forced to sign an agreement to this crops manifesto. And as a result of Tomasz leaving and this kind of circle jerking of Ethereum ideology within the EF, there's just been people leaving. And plus, we're in a bear market, so people are already upset about the price of ETH and how it's not going down. One could also argue that the price of ETH was going up when Tomasz was at the helm at Ethereum Foundation. So is this the market saying that Ethereum needs to have more of a market-focused sort of role and leadership? Or is this all coincidence and the price of ETH went up during a bull cycle and the price of ETH is going down during a bear cycle? I don't know. That being said, Dankrad says that the Ethereum Foundation should be run by a board that is held more accountable and is tasked with trying to make the price of Ethereum rise while being funded in part by staking revenue, by staking ETH and earning revenue from ETH. He pointed out that the Ethereum Foundation now holds less than 0.1% of all ETH, and there's no flow of Ethereum staking or fees revenue to the Ethereum Foundation. Look, May has just been the month to beat up on the Ethereum Foundation. And not only are they getting it externally from former contributors, but they're also just seeing a lot of people leave. We'll keep an eye on this story. I still love ETH. It's still the blockchain network that underpins the majority of RWAs, stablecoins. It's still the longest running blockchain with uptime, and it hasn't been hacked yet. So look, these are just culture war issues that we're seeing right now. And honestly, it's stuff like this that when an ecosystem is able to survive, it makes the ecosystem stronger. So let's not be praying for the downfall of Ethereum. That being said, we have a few more pieces of negative news before we finish the segment on positive news. So don't let me get you down on this beautiful Friday. We do have 2 networks or infrastructure service providers that are announcing their shutdowns. The Ethereum L2 Zero Network has announced that it is winding down. What was Zero Network? It was an L2 that was aiming to be a gasless fee network. They're going to be ceasing operations after only surviving for 1.5 years. Look, folks, the game in crypto is to survive. This is a long-term game. I have been building and working and surviving in crypto since January 2018. This is tough. It is not easy to be here for the long haul, especially in super hyper volatile markets and in a place where attention is just so short. The team said that they built out Zero Network to be an EVM-compatible, fully gasless roll-up to simplify user experience and foster mainstream adoption. While they believe that this vision remains valid, they state that maintaining a standalone blockchain was the wrong path to realize it. The best way is focusing our resources where they have the greatest impact for people who are using our products every day, the team said. I don't quite know what that means. How... Anyways, the announcement assured that users on the Zero Network are safe. So if you have NFTs, ETH, or other tokens on Zero Network, just bridge them out before the end of July. Bridging into Zero has already been suspended. RIP to Zero Network, man. Like, we are in the thick of bear market season. Not... The beginning of this cycle's bear market, which largely started in October, but we really started seeing the effects in January, July, March of entities cutting staff, Base, Coinbase, Optimism, Polygon, just you name it. A lot of foundations and ecosystems have been cutting back on staff, and we're just in the thick of it, man. Like, this is what happens during bear markets. And now we've exceeded the black swan that started all of this on 1010. We've exceeded companies and ecosystems downsizing to protect their runway. And now we're in the part of the bear market where we're starting to just see flat out projects shut down because they aren't finding PMF, product market fit, or they can't survive on the runway that they have left. Yeah, I don't know. I don't know what else to say. If you're using Zero Network, get your assets off. RIP to Zero Network. I'm never going to dance on the grave of projects that fail. Did we have too many L2s? Probably. And as sad as it is to see staff downsizing and blockchain projects shutting down, this is also the free market culling the fat. This is the herd, the weak, the old, the feeble being cut out from the herd so that what remains can continue to be strong. And yet, in another protocol shutdown, Everclear is winding down its protocol, and the Clear token has fallen by 50%. RIP to Clear token holders. Everclear was a cross-chain infrastructure startup that was backed by Pantera, a large VC that has invested in a ton of blockchain projects. They're not only shutting down the core UI and protocol, but also the foundation and research lab organizations behind the project, just completely shutting everything down. The protocol has been sunsetted. No funds are stuck. Any remaining TVL was withdrawn by users and partners. So it's done. All the assets are off. This is a clean break. Honestly, the best you can ask for if you're going to be seeing a project shut down. The team noted that while they are shutting down, they did see some success. The protocol achieved, quote, millions of dollars of monthly revenue, end quote, attracted, quote, major industry players, end quote. But unfortunately, they found the earnings were unsustainable during current market conditions, bear markets. Look, I really hate to say it, but this is just another bear market thing where survival of the fittest is just what happens. If you want to survive in blockchain and crypto, you have to be a cockroach. You have to be unkillable. You have to be able to stick through the thick and the thin when times are just so dire and so difficult. And unfortunately, that doesn't always happen for products and projects. The team said, quote, despite reaching $500 million in monthly revenue, the cross-chain solvers segment never developed the commercial depth we needed. Users proved highly price sensitive, and we were unable to convert that volume into meaningful revenue. Yeah, I mean, I had a conversation about solvers, or solvers came up in a portion of our conversation with Ilya Polasukin, the co-founder of Near. I interviewed him earlier this week. That episode will be releasing in 2 weeks. And that's why near intent is a thing, because solvers are good, but they don't pun intended, solve everything. Everclear said that it will use its remaining funds to pay off outstanding liabilities, and if there are any funds left over, they might execute a token buyback, though it might be between $50,000 and $200,000 if executed. So sorry to hear this, honestly, for Clear token holders. Never a nice feeling when the token you're holding not only gets cut in half, 50%, but the future for that token is extremely bleak. The only thing Clear now has going for it is speculation. Let's ease into some positive news. So the Verus bridge was exploited earlier this week, and the attacker has returned a little bit around 75% of the funds. The exploiter returned 4,052 ETH, around 8.5 million, and they were able to keep 1,350 ETH, valued at 2.8 million, which the Verus team offered as a bounty. And they also said they're not going to pursue any legal action. So cool. Honestly, like, this is usually when you see a hack of any amount, it's usually like a deer hacker, quote unquote deer hacker. That was the Poly Network meme when Poly Network got hacked for $600 million plus in 2022, 2023. Really, you're just relying on the hacker becoming a white hat or a white grayish hat rather than a black hat and returning the funds. So, yeah, Verus lost out on 2.8 million, but they were able to get 8.5 million back. This is a positive outcome to another negative story that we had earlier in the week. And folks, we are in security season. There are just so many attacks, hacks, and exploits that have been happening last month and this month. It is off the charts, the rate at which these are happening. So I will take any bit of positive, even if there's a little bit of negative when it comes to an attack. Near protocol. I was just speaking about Near. Ilya was on our podcast. You'll be able to hear that episode next week. Near protocol has a forthcoming upgrade that will allow the network to scale dynamically without human intervention. The market likes this. Near's gained more than 27% in the last 24 hours. Cool. What is dynamic resharding? The upcoming network upgrade will enable the protocol to add shards automatically as demand grows. That delivers on Near's founding vision of building the world's most scalable blockchain protocol at the highest level of performance. Let's also keep in mind that Near was initially launched in 2020 and was ideated in 2018 as a blockchain for AI. So, as we start to see a world where more and more AI agents are using blockchain networks, and if indeed we do get to billions of AI wallets, blockchain networks are going to have to be able to scale. And dynamic sharding or dynamic resharding is Near's bet. These next little highlighted yellow sections do a pretty good job at creating a metaphor for what's going on. So what is a shard? It's a smaller independent partition of a blockchain network that processes transactions and smart contracts in parallel. Imagine a grocery store with multiple checkout lanes. This helps Near handle more traffic than typical blockchains that have a single checkout line. Until now, opening a new partition on Near has been slow, a manual process, and required weeks of validator coordination, a vote, and a staged rollout. With the upcoming dynamic resharding that will launch in June, this process will be automated. So if we're going back to our grocery store example, when the network sees a lot of activity, when you're at a grocery store and there's a lot of people in one line, a shard will not have to wait for a human to fix it. It will automatically split by adding more independent parallel validators to the system. Just like if there's a ton of people in one line at a grocery store, the grocery store will put more employees into other lines so that that one line can be distributed to the rest of the lines and people can buy their groceries, check out, and the flow will go through quickly. In addition, scaling isn't the only thing that's changing with the impending upgrade that Near Protocol will be implementing in June. It will also be adding post-quantum safe signing, which is super important as quantum fears have been growing more and more this year, as they should be. Quantum computing is not here yet. It could be here as early as 2029. And with the rate that quantum is growing, which is exponentially, I wouldn't even be surprised if there was a quantum computer that was live and able to be functioning before 2029. 10 years ago, the experts in quantum thought that quantum computing would be here in 50 years. Today, those experts are saying it could be here as early as 2030 or 2029. That's only 3 years from now. So, 10 years ago, they thought that it would be here in 50 years, but the reality of the situation is now that quantum could be here 13 years from that estimated time frame, meaning they've shaved off 37 years in a 10-year time frame. That is the exponential growth of quantum computing. Bitcoin is grappling with quantum right now. They're grappling with how do you provide post-quantum security, because Satoshi-era coins, Satoshi's wallets, should quantum computing go live today, are completely at risk of being stolen. And we'll use that to... there's no more information about the post-quantum safe signing, but I want to sidestep crypto for a quick second and talk about quantum, because the United States government is investing $2 billion into quantum computing firms and is getting equity in them. The Trump admin is going to get equity in 9 quantum computing companies, including IBM, with a major push to secure U.S. leadership in the emerging technology. This move shows the growing prominence of quantum computing, where recent technological breakthroughs have deepened investor interest in its potential to speed up tasks ranging from drug discovery to financial modeling to cryptography. IBM is set to receive $1 billion to set up a new company to establish manufacture quantum chips, while other quantum chip makers are also going to get hundreds of millions of dollars. Other firms include D-Wave, Rigetti Computing, and Inflection, which will each get $100 million. And DRAC is going to get $38 million to tackle key technical hurdles holding back more powerful systems. The funding is being drawn under the CHIPS and Science Act, which was signed into law by former administration and President Joe Biden. We have to keep everything with a grain of salt, even though quantum computing could be here by 2029. That being said, there are still major technical challenges that remain, including high error rates that limit practical performance. So, quantum computing is not here yet. It will not be here tomorrow. It will not be here this year. It could be here in a few years. And to wrap up, I just want to do a nice little homage to the space I did today on the Smart Economy podcast, where I talked about Hyperliquid. And I just want to point out that even though we're in a bear market, the HYPE token is setting all-time highs. Largely, one could say that this appetite is coming from Wall Street, as 8 business days ago, the first HYPE ETF launched on the U.S. stock market and has brought in more than $54 million in inflows in the first 7 business days of trading. The HYPE token has climbed more than 20% over the past 24 hours. So has the NEAR token. So clearly, there's money and capital moving around in the blockchain and crypto space right now. It's just choosing specific assets. NEAR, HYPE, VVV. Can I think of anything else off the top of my head? Diem. AI. AI and perps are the two like killer markets. So yeah, let's just end the day on a feel-good story. You might not hold hype, but folks, there are people out there making money, and that should make you feel good. Because when some people start making money, other people start thinking that they can make money, and that just means that capital flows into our asset class and into our vertical. And frankly, after October 10th last year, after the massive cascading liquidations that happened, and then the other liquidations that happened in February of this year, I will take a few handful of assets going up in value. I will take that over the whole market dumping in unison. All right. With all that said, if you haven't yet, please subscribe to the Smart Economist, down here at the smarteconomist.beehive.com. And thank you for tuning in to the Daily Digital Download. We'll be back next Monday with the latest and greatest in what's going on in the blockchain and crypto space. If you have not yet, tell your friends and family you love them. Have a great weekend. Don't look at your crypto portfolio 24/7. Go out and touch grass. Have a beautiful day. And with all that said, I'll catch you guys next week. Take it easy. Peace.